Fish bowl. Super Bowl.
What's happening, you all? We back again. The CoWaCo, the company water cooler. Like, subscribe, comment, and share. We're not financial advisors. This is for education purposes only, but we about to get it in. All right. So first, we're going to talk about the importance of business subscription. Chris, what you got to say?
Yes, sir. Yes, sir. Ladies and gentlemen, thank you for tuning in. I am Chris. That is Leroy. This is the company water cooler. We appreciate you for joining us. The first point, the importance of business subscriptions. This is magazines. This is newsletters, digital or paper. This is pamphlets. This is anything that you can get your hands on business related that's going to further your knowledge of the business world. You have Business Forum, you have Forbes, you got Black Enterprise, you have, honestly, go with subscriptions in specific fields. You have Aviation Magazine, you have Marine Biology Magazine, I think that's what it's called, or it might be Biologist Magazine. But anyway, get magazines that are going to relate to business, obviously. Get subscriptions that are going to relate to business, obviously, right? Don't just invest, get a Charles Schwab account, put your email in, and then just receive the information that they give you. Actually go out and seek it. So yes, you have a brokerage with Schwab. That's perfect. That's fantastic. But seek out magazines that the brokers at Schwab are subscribed to, right? If you want to put a certain energy around yourself, you have to be purposeful about that. You have to be intentional about that. So if I want business related news scrolling across my thread in my YouTube, on my Instagram, I'm going to let my searches see that. My searches are going to, so that way my algorithms can properly inform me of things that I want to be informed of. So, and you'll notice this, like we've been talking about for the past couple of weeks, you'll notice this with data. If all you're YouTubing is how to solve Rubik's Cubes videos, what videos are you going to get suggested? How to solve Rubik's Cubes videos, how to solve math problems, how to solve this problem, how to solve that, equations, all of these other, we think, you know, people who watch this video about how to solve a Rubik's Cube also watch this video breaking down the explanation of acres to kilometers or gallons to to liters, so on and so forth. So it's going to break that down for you. So what you want around you, you have to use these algorithms to your advantage. You have to use these subscriptions to your advantage. If Business Weekly is a magazine that you're subscribed to, it comes to your house every week. Or let's say you do the digital thing, because they can guarantee the digital will get to you every week. That gets to you every week. You go into their database. Somebody might be working at Forbes and see, oh, well, they have a listserv over here, Business Weekly. I need to get those people on my listserv so then they can pay for my services so I can provide it. So it's using your algorithms in a good way. It's using that tracking in a good way to enhance your life, to enhance yourself, to enhance your business. So when you are invested in Apple, Microsoft, Google, Tesla, Walmart, Home Depot, so on and so forth, right? All of these good companies. When you're invested in them, see if they have a newsletter, see if they have a subscription, something that they can send you, something that you can read, something that gets to you so you can pay attention to it, so you can know what your investments are doing. That's the importance of business subscriptions, to know what your investments are doing.
That's what's up. Okay. That makes sense. What you subscribe to is what you feed in your mind, what you feed in your brain, what you feed in your constantly, what you feeding yourself. So that makes sense.
Yeah. I mean, think about it if you a sneakerhead, right? Like, my fault, Leroy, but think about it if you a sneakerhead, right? If you know all of the Nikes that came out, you know all of the Jordans that came out, you even know all of, like, you know some of the Air Max, like the off Air Maxes, the Air Mavens, or you might know the downshifters, or you might like the the stuff that's not going to cost that much, right? If you know them, if that's what your internet searches are, if that's what Nike keeps sending you, they're going to push you to say, okay, you spend about $3,000 a month with us. So you feel like we're connected. Let me subscribe you to our newsletter. Let me offer you this free, because it's not free because you spend $3,000 a month with them. Let me offer you this free subscription. We'll send you a catalog. We'll send you a magazine. You'll get an email. You'll get this, you'll get that. We'll make you a part of our premium club. You'll be one of our exclusive members. We'll send you coupons. We'll send you deals. Now, if you're spending $3,000 a month with any business, you better be invested, one. And two, they also better offer you some coupons, some deals or something, like for every 3,000 I spend with y'all, I get 500, something. Because if you're spending money at an institution or you're spending money at a place that doesn't give you a return, all you get is a liability, I'm good. I'm good. If I eat out all the time, if all I eat is fast food, and they're not bringing me back anything, I can't do that. The rewards points, okay, cool. Come in and get a free sandwich because you done bought 25 of them. Not the best deal, but it's still a deal, right? But if you spending and buying 25 sandwiches, they don't offer you nothing. You buy another 25, they still don't offer you nothing. You buy another 25 and they still don't offer you nothing. You might want to sit down with Jesus and sit down with them and go, no, this relationship is over. We're breaking up. Because if they're not offering you anything, you're not putting any money in their hand. And that's just a fact. So if your investments are not bringing you any, and an investment can be good or bad. We're telling you about good investments, obviously. But a bad investment, of course, is just you throwing money into a pit. You throwing money at something that's not bringing you anything back. I know you're a human being. You love, you've hurt, you feel, you want to be nice to everybody. I agree. It's not about being nice. It's about practicality. I'm invested in this because it brings me back. That's it. It's nothing personal. The minute it stops doing that is the minute I stop investing, right? So you'll see dividend investors, they have companies that they're invested in. The minute that those companies stop offering dividends, people jump ship like they're supposed to, because you stopped offering a dividend. What happened, right? Something was wrong with the fundamentals, something changed in management, whatever it was, right? But you stopped offering the dividend. So I'm done. Once you start offering dividends back, maybe you can get me back, but it depends. Did you get rid of management? Like, what we got going on? But because you offered me, and it's not like you offer me something for nothing. In exchange for you offering me something, I got to give you something. Okay, so here's some money that I'm investing. What can you do for me? You have to start asking yourself that question. You don't have to ask it out loud, but what can you do for me? Otherwise, it's a liability and not an asset. And as the good brothers at On Your Leisure say, you know, huge fan, assets over liabilities. We cut all the liabilities out. We only bring in the assets in.
That's what's up. And also, too, he said, Chris said something important, too. He said, whatever the institutions actually subscribe to, you should subscribe to those, too. Because those are the big players. So you want to follow what the big players are actually doing. So, all right. So next one is, let's get it. Our next one is investing during turbulent times. Like these right here. Chris, what you got to say?
Like these, man, just like these. Listen, it's a lot of nervousness going on, right? It's a lot of nervousness. It's a lot of nervousness going on, right? A lot of people are like, well, should I pull my money out? Should I change investment? Should I move to a different asset class? Should I keep investing more? Should I open up another account? Yes, 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 and yes. You should do all of those things and none of those things at the same time. You, first off, never stop investing. I'm never going to tell you to stop. If you ever hear me say that right here off camera, somebody got a gun to my head and I'm like, yeah, you know what I mean? But never stop investing. I'm never going to tell you that, because even in times like these where it's tough, this is a great buying opportunity, because the market has to rebound. I mean, there is no, people are not going to stop spending money. That's never going to happen. People are not going to stop buying things. Things are not going to stop getting created. Men and women are not going to stop inventing. Like, genius is not going anywhere. It's going to be here. Okay. We're just going through this lull right now of this shift that's taking place. But money is not going anywhere anytime soon. And the things that money can bring are not going anywhere anytime soon. Banks are not closing anytime soon. Airlines are not closing anytime soon. Logistics companies are not closing anytime soon. Tech companies are damn sure not closing anytime soon. So you have the world will keep turning. It will keep spinning. Change has to be slow. Change can't be fast because that's too abrupt. And the revolution that happens as a reaction to that could totally topple the empire. So we're not going to chance it. If I've got $1 billion sitting somewhere, right? I'm not letting you touch that at all. I'm going to protect that because of what that $1 billion can do for me, right? So you have to think about these institutions that are managing hundreds of billions, trillions of dollars. Change is going to be slow, but they're still going to decide what change it is. And that's fine. They've won the game. You got everything. You want in, you want to change the game, you go over there then. And you make them change the game. It takes a lot of work and it takes generations, but you can do it. But times like these are buying opportunities because good assets, which is what we talk about here, are on sale. Good assets are at a discounted price. Amazon stock, when I checked today, is trading at $114. It split at $125. Let's ask ourselves an honest question here. Will Amazon ever get back up to $125 a share? Oh my God, I think it will. So let me buy at 114, wait for it to get to 125, and I can sell it and make a little $9 profit. Or I can hold it and I can hold it for 2 years, 3 years, 5 years, 10 years, and make thousands, hundreds of thousands, millions of dollars profit, right? Good assets are on sale right now because there's a shifting, there's a restructuring. So what happens when good assets go on sale? Management is saying, okay, we may have to shift our 10-year plan on how it affects our 20-year, but we still will keep our 30-year. You got to understand, these companies have 50, 100-year master plans, which means you should too. You should have a plan for when you're 80, when you're 90. You should have a plan 5 years from now, 10 years from now, 20. You should already have all of that worked out. And all you're doing now is just following your instructions to get you to where you want to be at 50, at 60, at 70, at 80, right? So on and so forth. You can't just, oh, well, I'll see. No. Have that plan, right? Because it's going to be your 30-year from now plan is going to be, that should be the most solid because you have 30 years to get to that point, right? Like you got 30, if you want to see 3 commas in your bank account in 30 years, that plan should be solid and stay right there. It's the 5 and 10-year plan that may have to change a little bit. You may have to morph it a little bit, but that 30-year staying right there. And then year 12, year 14, you're like, okay, year 30 is coming up. It's only 15 away. Here's where I'm at. Okay, boom, boom, boom. And this happened, so it changed that. So now my 20 is this, my 30 is still good. I'm here, but now I got to get in grind mode. Now I got to hustle. Now I got to do X, Y, and Z, right? I'm already at a great point. I got 2 commas in my account now, but I got to get to 3 and 10. So how am I going to do that? And then, so now, okay, cool. Let me revisit my 30-year plan. It might help if you take that 30-year plan that you have and you hide it from yourself. You write it down. This is where I'm going to be. You plan it out. Present it to yourself. Give yourself a presentation. And then put it over there. Put it on a USB drive. Save it onto your computer. Put it over there. Don't check it for 5 years. And that daily plan that you have, that you keep, that notepad, that journal, that book that you keep for your short term, for your 5-year, for your 10-year, in 5 years, when you're going to go check, okay, let me check that 30-year. Let me see in that 5 years what I've done from that 30, what I've knocked down from that 30. So it might be best to do that. But have that 30-year set, that 40-year set, that 50-year set. and change strategically the 5 or 10 year. Don't tweak it a whole lot. Don't tweak it a whole lot. Just change it enough so that it will enhance or it will benefit that 30. But in times like these, stay invested. Think about it. If you can get Google at less than $100 and they just split as well, I think Google's gonna get back above 100. I just got a really, really, really strong feeling Google is gonna get back up to 100. So if I'm invested in it now at 99 and I'm buying so much every week, I'm buying so much every month, by the time it get to 100, I'm like, man, if I sell a handful of these, like that's this much profit. So you can see that Google is not going anywhere. Microsoft is not going anywhere. Home Depot is not, Walmart, Target, they're not going anywhere, right? So a couple dollars off from what it, man, go ahead, get in. Go ahead and make that happen. Do that. I'm in there. So that way, when Google gets to 150, which it will, in 18 months, it'll be, once it gets to 150 and you bought it at 99, that's $51 profit. So imagine if you buy 10, 20, 30. Imagine you look up and you got 200 shares of Google and they traded, and you bought all of them under $105 and now it's trading at $150. You got some decisions to make. You got a couple, hey man, now listen, you're gonna pay Samuel, he gonna take his money. But it's 20%. You got to pay him. You got to do that. I'm not here to tell you don't, because you have to. You need to. You want this country to stay? Okay, cool. You got to pay that man. So you're gonna pay Samuel. But you still gonna get 80% of what it is you take. I buy at 100, I sell at 150. I gotta pay 20%. Okay, that's fine. What's that? $30, right? I paid 30, but I made 20. I made, right? So in times like these, when it's turbulent, invest. And yes, look at different asset classes, real estate, cryptocurrency. Look at all of these different things. Have your hands in all of them anyway. But when it comes to investments, when times are tough, get rid of all of the distractions and just invest.
We did an episode about budgeting. So just buckle down and budget investing in your budget. Just remember to actually do that. It's very important, especially during the turbulent times. It will definitely pay off for you. And when you look back, like I said before, like, wow, look what happened, and you're in the green. And so investment is red, and then once your investment is red, start shooting up into the green, you'll be looking pretty. But remember, you have to do the quality company though.
Right.
Quality companies. So all right. We're to the point now. Favorite of the week. Stocks of the week.
Yeah, and I got my 3. I done listed mine already. So my first one, Walmart. You know that to the end of the year. Tesla is my number 2. Microsoft is my number 3. All great companies. Here's why Tesla. Tesla is trading at under 225 right now. So when they split and it was right at 3, I think that was a few weeks ago. It was right at 3. They closed one weekend pretty strong. And now it's at 2. That's a deal. That's a discount. I think Tesla's going to get back up to 300 and then surpass it again and then split again. I definitely think that's going to happen. It's a technology company. It's a software company. It's an internet company. It's a company of the future that just so happens to make electronic vehicles. So boom. And I had this episode as a sample. I'm not biting anything. It's a sample. Y'all heard it elsewhere. I'm just sampling all of these right now, reaching out to who I can. So check that. Tesla, internet, vehicles, satellite, they're going to different planet. They're doing all of that, right? Okay, great. So it's a perfect investment because Tesla going to be here #1 in the EV space, and they have great partnerships. And I mean, they're doing good things. Microsoft is Microsoft. So it's really no beating. I don't really have to say anything, and I'm not. So Walmart, because I mean, really kind of like Microsoft, but the dividend is good. Spending is going to be heavy. Their plans for the future is great. Their online retail space, getting in, there's less competition selling on Walmart than what there is selling at Amazon, which is great because Walmart has 4,000 plus physical locations. So you get a product on Walmart.com, it's popular. They start putting them in stores. That's 4,000 plus doors, right? That's tens of thousands of acres. Every Walmart sits on an acre of land. It's probably more now, but that was the base a few years ago. Walmart buys an acre of land, they put their store up. That's why they have these tremendously large parking lots, right? So Walmart, Tesla, Microsoft.
Man, that's what's up. Okay. Let me see you, Chris. The 3 bangers coming through. All right, so my first one is called info phase energy. In-phase is called in-phase energy. And I know he just talked about Tesla, right? And Tesla is even in the solar too. So in-phase energy is a solar company. And they actually deal with like solar dealing with houses. And so with the initiative of stuff moving towards solar, right? And they're actually in this particular space. I'm gonna tell you real quick. This particular stock was like $70, right? On today, this stock is $258. Now think about that. So, and remember now, you don't have to, when we are saying these companies, remember now, you don't have to actually buy a full share. You can still buy partial shares. But just think about it went from 70 to 258. Check the company out. In-phase energy. All right. The ticker for that particular company is ENPH. So you better check it out. All right. My next one, FedEx. Yeah. So now, with the holidays coming up, people are going to be shipping stuff to people. Left to right, left to right, left to right. And they're going to be using FedEx. For sure. All right. Now I know Chris, he like UPS.
They're going to be shipping stuff as well, so it's fine. Yeah.
Right. All right. And then my last one that I have is it's called NVIDIA. NVIDIA is a chip company. All right. So with NVIDIA, with the technology that's actually out, they use chips in their particular devices. All right. So if you think about it, the chips that they have to actually purchase, NVIDIA is a really good company that they actually have these very great performing chips. And also cards too, video graphic cards, which are inside computers. So NVIDIA is in that space. But those are my 3.
Yes, sir.
Phase energy, FedEx, and NVIDIA.
Yeah. And NVIDIA going through it right now, but I think they're going to see it through. They're going to make it.
Oh, well, even though
Yeah,
they're
they're
going
going
through
through
right
it.
now, this is a
Yeah,
good
they're going
time
to make it.
through the turbulence.
Yeah, through the turbulence. Yeah. We at 35, 36,000 feet right now. The plane rocking a little bit. It's cloudy, a little water driplets on us. We a little nervous right now. We're shaking. We feel a little dip. But on the other side of that, clear skies. So keep investing.
Keep investing. All right, you all. That's it. The CoWaCo. Like, subscribe, comment, and share. We out. Peace.
Till next time.